Right, guys. I think it's third's educational video. Yes, it is. Let me check. Let me check. Third educational video. Yeah. Yeah. Right. Like I said, it was a split decision, market structure and candlestick patterns. I'm going to separate them over two videos because, like I said to you, I want you to digest one thing at a time, understand one thing at a time. So then the next thing makes it easier because you've understood the previous. Market structure is just, in a nutshell, what the market produces every single day, right? And this is based on every single time frame. You've got to understand that there is all these different time frames, okay? All the way through. You can even do a custom one, right? You can make custom time ranges, if you want to trade on the 1.30-second time frame, you can add that in. These are the major ones. These are the ones that most people trade 90 minutes, 2 hours. I've traded 3 minutes, lots of different ones. But I just stick to my normal 5, 15, 30, 1, 4 day, weekly and monthly, right? And market structure is created on every single one of those time frames. What is market structure? Well, it's this. It's what the candles produce, right? These are wicks. These are bodies of candles, right? I'm on the 4-hour time frame. These are lows, right? These are highs, right? These are highs and lows. Whenever you see things like this is what market structure is building. It's creating this kind of flow, right? You don't have to have it on candlesticks, but I would advise it a lot of the time. When you first load up TradingView, you get line charts and all that sort of stuff. Just switch it to candlesticks. And the easiest way to kind of understand market structure is knowing that it is telling you where the direction of the market is going, okay? You can easily just look at price or the market structure and understand that, right, well, we're trending up. Why? Because this was our initial low, right, after this retracement. A retracement is just a pullback on an already existing trend. So we're trending up. We need to have some sort of retracement because, once price gets to a certain area, investors, banks, hedge funds, institutions, they take profits, right? Retail traders, we take profits, right? When you take profits, what happens? Money is then coming out of the market, so price starts to descend or retrace. Or if people are waiting on the sell side, right, they're thinking, right, I want to wait until price gets to 134 flat, and then I want to enter my position. The buyers are seeing that, okay, well, we've met a lot of selling pressure around this 134, so we're going to now take our profits out. Then the selling pressure becomes the more dominant thing in the market, okay, which creates the retracement. Or the buyers might just go, right, do you know what? I'm going to flip or I'm going to hedge my position. And I'm in long positions, which is buys. I'm going to now put in a few sell positions because I can see that, we've met a level of, point of interest or whatever you want to call it, demand, supply, blah, 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 bollocks. They hedge their position. They put in some sells for the retracement, which I've done a number of times. And then they'll wait for a certain level, which in this case was 131,500, and they'll take their profits, right? But what they are looking at is price creating. So when we've got this high here, right, which is the overall high, we're waiting to see a lower high. So a high that is lower than this one, which is this one here, right? So once you see that, you can understand, well, this high, there wasn't enough buying pressure to take out this high. So this is a valid lower high. So people would get into their position and sell it down. See this low here, okay? This is a low point. Ideally, when you see a lower high, you want to see a lower low, which is created here. This low took out this low here, okay? So, all you're doing when you're in a position is watching market structure. You're watching to see if highs are Higher highs are being created with lower highs on the upside. See, low, high, lower high, higher high, lower high, higher high, higher high, lower high, because it's just seeing that these lows are not taking out this low, this low, this low, this low, this low. So they're valid lower highs. There will be, higher lows. There will be instances where you get like little mini, what I class is like little mini fake kind of highs or lows, right? And, you know, sometimes you get into a position and you think, oh, you know, is this you want to draw like a trend line. Okay. I'll go over trend lines in another video. And you put it on, you know, 1, 2, and then the next low comes down. Or have I got an example of this? Say here. Okay. Right. We've got the high. We've got the lower high, right? This might not be a valid lower high, right? And this is purely, for me, done by eyesight, okay? Me having looked at stuff for so long to understand that, okay, maybe, because, you know, you could have drawn a trend like this, maybe that's too sharp, right? Maybe what is actually happening is this is creating the high here. So maybe we get a high here, okay? Because I'm also then tying it into other things that market is creating structure-wise. This bearish engulfing candle here is, you know, part of market structure because it's creating a candlestick that's adding to the pattern or the flow of the chart, right? So that trend line that I drew there, because, you know, price was here when I drew it, sorry. When we actually, you know, let price play out, this could actually be a lower high structure wise, because again, it's, if you look at these, and again, this is why I always use trend lines. I don't know why the fuck people like, you know, talk bad about them. Structure wise, trend lines need to make sense, right? They need to make sense when you draw them on and you see breaks, right? Boom, look, broke. Okay, so valid trend line. On the downside, you know, structure wise, highs to the other highs, broke, and up the trend, the continued trend happened. So again, it's just, you know, these trend lines and stuff and market structure needs to make sense visually. Okay, if it doesn't make sense visually, then I would not be in that kind of market, i.e., not looking to take setup. If let's say for argument's sake, right, look, NZD CAD, right? This right here is not market structure that makes sense. This is a market structure that doesn't know what the fuck it's doing, doesn't know where it wants to go, so it is just continuously trading sideways. This could be a number of different things. You know, I know that CAD tariffs were being reviewed and for, I think it was 90 days or something. So this could all be down to, you know, the tariffs then coming out, be it what they may, and then price moves, okay? So that is, again, all to do with market structure, because what is market structure creating? Well, on the daily time frame, it's just a lot of shit daily candles just in a sideways market. That is market structure right there, okay? Let's go to GBP USD. GBP USD. Market structure on the daily time frame is trending up, okay? We can clearly see that because we can take a trend and we can start making touch points to all of these. Look, low, higher low, higher low, higher low, right? Higher low here potentially. If not, even if this comes back down here, it's classed as a higher low because it hasn't broken this low here or this low here, okay? So that is classed as market structure. But that's on the daily time frame. Weekly time frame. If we look at the weekly is trending up, low, higher low. We haven't had a higher low yet. Well, that can be classed as a higher low, but I would call it a fake one because it hasn't come down and created a touch on the trends. Okay. So this is market structure. But overall, if you're actually looking at it, it's pretty sideways, i.e., it hasn't broken out of this range here. Okay. So this is not a trending market. It's actually a sideways market. Here is a trending market because it is flowing downwards. Here is a trending market. It's flowing upwards. Okay. But, market structure is just something that you have to visualize on the chart. You have to understand what is trending, what is not trending, what is consolidating, all that sort of stuff. And like I said, the lower time frames, all these 5 minutes, the lower you go with the time frame, the more you're going to get noisy stuff, right? All of this noise, small little uptrends, noise here, noise here. But what you've got to understand is all of this is building up a 15-minute candle, okay? So there's 3 5-minute candles building a 15-minute candle, right? There's 2 15-minute candles building a 30-minute candle. There's 2 30s building one. There's 4 1s building a 4. This is why I say the higher the time frame, the clearer the structure, right? So when you are looking at your overall bias when it comes to, or your trade idea that you are looking to take, look at it on the higher time frame, because the structure and what the market is printing on the chart is going to be a hell of a lot clearer than what it is if you're looking at the 5 minute. Only be looking at the 5 minute, 1 minute, 2 minute, 3 minute, whatever you want for little scalpy trades. Okay, that is what you use those time frames for. I've taken many a setup based off the 4 hour, i.e., I've entered off the 4 hour. But this is the 4 hour time frame and the 1 hour time frame are the perfect kind of entry amateur level time frames to trade on, because they're the clearest, they're the simplest. I know fucking old school traders that trade on the daily, right? They don't really care about anything other than the daily, weekly, monthly, because they are just waiting for a level, boom, entering in, right? They don't give a fuck about breaker structures, market structure shifts, supply and demand, POI, all these other little imbalances and all that sort of stuff on the lower time frame, because they're not interested in that, right? They're only really interested in what the daily time frame, if the daily time frame has tapped into an imbalance or as market structure shifted to the upsize. Now, there's a little bit of controversy because people will go, oh, well, you might be able to get a better entry on the lower time frame. Yeah, true. Right? You might be able to, but you also might get stopped out because you've not identified the right entry, right? Because you've missed this or you've missed that, or you've liquidity sweep and a fucking this, and this, right? All these technical terms you might do, right? What's better? What's more certain? What's more certain? Anything that is above probably a 1 hour, right? Because there's a lot more that's gone into building that 1 hour, that 4 hour bullish candle or that 4 hour bearish candle than it has to produce a little 5 minute fucking bearish engulfing candle. Okay? So I would prefer to be more certain, right? This is why, I haven't got any wood in around. Wood. Okay, well, this is why, touch wood, I haven't suffered that many losses this year. I think maybe 2 losses I've taken because I've been just waiting. I've been sitting on my hands. I've been looking at the higher time frame structure, candlesticks, all this sort of stuff, levels, because that is going to give me more confidence than me looking at a 5 minute time frame to produce me a 400 pip move, because I could just get fucked over. Because I've not actually seen that the 5 minute candles that it's printing on the chart is not building the candlestick on the higher time frame that I'm actually looking for. And I've got wicked out. Okay? So when you're looking at, and also picking your pair to identify market structure simply, that is going to be a godsend. Do not try and work out market structure on things like GBP AUD or GBP JPY. Euro JPY, all of this sort of stuff, right? Because a lot of the time you're looking at, your small time frames, you're not seeing that actually on the higher time frame, price is just fucking consolidated and shit. But this again ties down into, what style of trader you are. I'm a swing trader, okay? I'm a lot more patient. I take a lot less setups, but my setups are more for bigger percentage gains and for longer periods of time. If you want to be a scalper, if you want to be a day trader, okay, cool. You're only going to be really interested in what, 31 hour, depends on your pip move, okay? If you're only looking for 20, 30 pips, you don't need to really be worrying about 4 or 5, sort of 4 hour daily, okay? If you're only looking for 10 pips, you don't even need to be worrying about anything other than a 5 or a 15, to be honest. So that's all about what you've got to start off doing first. You've got to pick what style of trader you want to be, what fits your personality, okay? Because again, everyone's got different personalities. I'm, as much as I can be, a stress-free person. So what do I want my trading style to be? Stress-free. I think everyone deep down wants to be stress-free. But you've got a lot of adrenaline junkies out there, guys that love that kind of adrenaline, that nervousness, that unsettling type feeling about things that they do in life. Trading is going to reflect that massively, because if you're a scalper and you like to work with small stop losses but big lot sizes, you're risking 5 or 10% per trade, that's the adrenaline junkie type things. Big, high risk, high rewards. I don't like that. I've done it. I've tried it. It's okay. Like you guys have already seen on my 100K to a mil flip. I did 75% in 1 month. But I did it. And actually by the end of the month, I was fucking shattered. I was shattered. I was like, nah, it's not worth it. I'd rather just build that up over a nice period of time. It looks realistic. It looks consistent. It looks sustainable. If I ever wanted to use it as promotional material for, sorry, my NZD CAD's thing's just gone off. If I ever wanted to use it as promotional material for, investors or something like that, I could do, right? And it would be fine. But yeah, it's one of those. You got to pick your style. You got to pick the mentality that you have. And when you're looking at identifying market structure, when you first start out, you need to be doing it on higher time frames and on pairs like GBP USD, Euro USD, nice flowing pairs, okay? Pairs that throw out nice market structure, good identifications, nice lows, nice highs, respecting psychological key levels, all that sort of stuff, okay? So that's it in a nutshell. Next video, I will talk about candlesticks and some some patterns that market produces, and that might help you identify trends in the market or trades to take. But that will be coming. So take care, guys.